Good morning, San Diego. With the recent Federal Reserve interest rate cut and fixed rate mortgage averages hitting a record low, is it now the time to consider buying a home? Joining us now to talk more about getting into the market is Jim Bottrell, founder of Jim Bottrell Real Estate Team. Jim, the last time we were here, you sat in that very chair and coined the phrase, people enjoy their mortgage rates so much they're like a tick, an Alabama tick.
They're dug in like an Alabama tick.
Dug in like an Alabama.
And she spit out her coffee on the desk, made my whole morning.
Is there anything happening with the rates now that might loosen the grip of that Alabama tick?
Well, okay, so we know that after we met, the Fed dropped the interest rates. So let me describe real quick. Fed funds rate is not mortgage interest rates. The Fed covers the Fed funds rate, the overnight lending rate for the banks. It's a leading indicator of what happens or influences mortgage rates. So they dropped 0.5%, which was kind of a surprise. We were thinking maybe it was going to be 0.25%.
You said it was going to be a quarter, and they doubled it.
And I did say it might be an outlier. They go 0.5%, which they got aggressive, 0.5%. But I said it really wasn't going to do anything to mortgage interest rates. And it didn't for a couple weeks, and then they dipped down, and then they just came right back.
And why is that?
Well, because it was already baked in. I mean, if you look at where we were 1 year ago in October of 2023, we were having buyers buy houses and they were getting an 8% interest rate or 7.5% interest rate. Well, now they're at 6.25%, 6.3%, something like that. So it was already priced in, and that whole drop happened without the Fed dropping interest rates one time. So, like I said, the Fed funds rate influences mortgage interest rates, but it doesn't control it. That's a free market. It goes up and down however it wants to go up and down. So it was already priced in. So that's why when the Fed dropped that interest rate, we didn't see mortgage interest rates drop because it was already priced in.
As a home buyer, should I be more focused on the price of the home or the price of the loan?
You know, that depends. If you remember when I was doing these things, when I started doing these things back in 20 and 21, so I've been doing this for a while with you guys now, is I was saying interest rates are super low, buy that house now, lock in that interest rate for the next 30 years. Housing prices have been going up and they're going to continue to go up. We went 5% so far this year. All right, and next year, we're going to at least do that again. So to me, I don't think interest rates are going to go any higher. Right, I think that's kind of where we are. I mean, we're going to go up and down a little bit, but overall, I don't think we're going to go back to 8. We're more likely to go to low 5s over the next year or two. But houses are going to be more expensive when you do that. The longer you wait, the more the house is going to cost. So what I would do is I would buy the house today, right? Get that locked-in price today at today's interest rates, and if and when mortgage rates go down, then you refi to that lower rate. And that's the thing that you can do with mortgages that you can't do with rent. Rents only go up, right? Have you ever heard of rents going down? I never have. Right.
Yeah, Dave Ramsey is a proponent of exactly what you're saying.
Rents only go up.
It's the biggest line item, budgetary item that you're going to face. Yeah. Lock it in because you might have a killer rent right now, but 6 years from now, you're not.
Yeah, and that's the thing is, you know, you look at people that bought houses a long time ago, and they didn't pay a lot for those houses. And as interest rates went down, I mean, when I bought my very first house in '99 and then sold it and bought another one in 2001, I still own that house as a rental property. I paid $399 for a 2,500 square foot house in Santa Leo Hills. Think about that, right? When I bought that house. And when I bought that house, the interest rate was about 7 or 8. Well, today I've refied that into 2.5, right? So I got that lower price, and now I get today's lower payment over the time I refied it a bunch of times. And that's the advantages of mortgage.
So how do you advise clients or people who want to buy a home from you, how do you get them straight with the bank so that they can get a mortgage? Well, what advice can you offer them to make them more attractive to be a good risk?
Okay, well, credit's always going to be huge. And there's an easy way. So we see people all the time that have these mortgage lates, or excuse me, not mortgage lates, credit card lates or something like that. You want to know how to never have a credit card late again, ever? It's a very simple thing. I've done it myself, whether I use the credit card or not. There is an automatic payment that I set up from my bank to pay the credit card on the first of every month of $100. Whether I use that credit card or not, it's the extra $100 goes all the time. That way the credit card company got a payment. Now I pay my credit cards off every single month, so I'll make 2 payments. The automatic one goes automatically, and then when I look at the balance and it's time to actually pay it, then I pay it. I would recommend everybody do that. Just set yourself up an auto pay because you forget. It happens. People forget. And if it's an auto pay, the credit card company got their payment, so you won't get the late. That's probably the biggest thing.
And your credit report doesn't take the ding.
Exactly.
Jim, we have to call it a conversation there. Just as we wrap it up, rest of the year into 25,
The rest of the year is not much is going to happen. We have an election coming up, so that we're going to see.
Oh, I heard about that.
Yeah, we heard about that too. Yeah, it's a couple weeks or something like that. I'm not sure. We got to look into who's running. So everybody's hunkered down. Everybody's hunkered down. They're saying, well, I'm going to wait to see if my guy or girl wins, and then they end up doing whatever they were going to do anyway. Forecast for 2025, it's going to be a lot of the same. I do think interest rates are going to come down some, regardless of who wins. The question is what is, and this is the bigger conversation that we'll have next time I'm back. With each party, each candidate, I can talk about what I think the real estate market is going to do under the different people.
Next conversation.
Next conversation.
Jim Bottrell, everybody.